Today I have the pleasure of speaking with Jeff Phillips from Global Market Development. How are you today, Jeff?
I'm great, Tracy. Thanks.
Jeff, the last time I saw you was in New Orleans when you gave me this silver dollar and you said that we were officially at the market bottom, or did I get that wrong?
Well, I think what I told you was that it was the end of October at the conference, and I felt there, and I've sent this out to some of my professional clients that, there was a good 75% chance we'd see the bottom in November. And, typically 75% of the time, a small number of quality companies, again, out of the resource space, tend to have very good Decembers, Januaries, and Februaries, and you stand to see a pretty good bottom in those stocks. So absolutely, in that context, yes.
Well, I can tell you right now, it feels like the bottom to me. I want to ask you, which sectors are you feeling most optimistic about right now and into the new year?
Well, in the natural resource space, which I mostly focus in, I'm feeling most optimistic about companies in any commodity space that actually have quality management teams and quality assets. I think across the board, you've seen whether it's precious metals, uranium, base metals, specialty metals. You've seen all of these companies severely, depressed in prices over the last 3 years. We're on the second longest bear market in the junior resource slash development arena that I think most people have seen in their lifetime. So again, I think that if you're looking at the quality companies with quality assets and quality names, I think it doesn't necessarily matter which commodity you're focusing on. You're going to see again, there's a 75% chance you're going to see a pretty good rebound in these quality names, at least into the first quarter. So.
Okay, and the first quarter being for our audience out there through the end of March, is that what we're looking at in 2015?
And I'm not saying that this won't be the ultimate bottom in the resource space, similar to 2008, 2009. Everybody always talks about the PDAC curse, which is the large mining show in March, where quite a number of times, the speculation dies after March and you see prices come down. However, that being said, we have been in a 3-year bear market. I do expect over the next in the next 4-year time frame, you're going to see a raging bull market in these resource stocks. Whether that starts in 2015 and just continues, after the tax loss bump and fund redemption bump that we're seeing now, I can't answer that. But I'm buying quality names at this point that I know will be around over the next 4 years, because I expect, much like bear markets end, that's how bull markets begin. So I think we'll be into a major bull market here in the future, and I want to own those quality names with quality management teams that, will be in the game. Their companies will be operating for what will definitely be a bull market, because it always follows a bear market.
Well, that brings me to my next question. Global Market Development, your company often does consulting to help companies achieve their greatest level of success. What kind of advice, what I'd love is give we have a lot of CEOs for small caps that come to our site. What kind of advice would you give these CEOs as they're trying to, for instance, if they need to endure a bear market for, say, another year? Do you have any advice that you can offer?
Well, yeah, if I'm talking to CEOs that are actually own shares in their companies, and my first advice is do what's right for your shareholders first. So it's a tough market. Don't plan on the market getting better. A lot of people have done that for the last 3 years. Oh, we don't want to raise money at these prices, and they continue to put their companies in worse cash positions or in no cash positions. So the key is not to come to the market when at the last minute and you have to have cash, but it's to plan ahead. And I often talk to CEOs, and especially in this bear market, and they want to be excited, even though this is a very unexciting market and very tough for them to raise money. And they'll tell me everything that this is what we can do. This is why our assets undervalued. We're out of money. We need help. And I ask them, what's your plans for the next 2 years? Can you send me the outline? 90% of the time, they can't send me an outline. They say they're going to work on that. Well, before you call someone asking to raise money, or this is why show me a 2-year plan. If this is the money we're going to need, here's the milestones we're going to make. Not just, gee, I'm excited and, we're super cheap and we'd like to raise $500,000 so that we can stay in business. And, well, what is the business plan? What do you need for the next 2 or 3 years? Come to the finance people with, this is my plan. This is how we can measure the execution of the company. And here's what I want to do. Because, again, raising a small amount of money isn't going to get you out over the next 2 or 3 years. So.
Well, I think that's incredible advice. Number one, put your shareholders first. Number two, have an actual a business model prepared for the upcoming 2 years before going to the investor. I have another question for you. So I'm a CEO, and I think I have the most wonderful company in the world. What main primary five variables, for instance, would be music to your ears, Jeff?
A management team that has a past track record of executing for shareholders, whether what they did worked or not, they actually set out and did what they said they were going to do. Exploration and development's a tough business, so success isn't necessarily based just on selling a company or making a big discovery and selling it, because that's very hard to do. But I like to see companies that have, this is my last company, this is what I did, and whether it worked out or not, this is where we put the money and how we did it. So that would be number one that I'm looking for. Number two is looking for an asset that, I'm not, betting on super, the underlying commodity has to go much higher for it to make sense. I want to see something that's, close to these in the range that we're in now that may make sense, even though there's unanswered questions. So again, I want to see a project that makes sense, not at, we can make a fortune at $2,500 gold, because again, there's lots of, if we have $2,500 gold, your listeners can go ahead and pick any name with gold in it and they'll do quite well, whether it's a honest company or a dishonest company. So when I'm looking for things, I'm looking for real assets, things that if I write a check now, I'm prepared to write a check in the future for, even if it gets cheaper, because I'm buying an asset I like at cheaper prices. Just like if you go to the shoe store and you have a favorite pair of shoes and you plan on buying them, and you get there and you find out they're half off, well, you don't walk out because you're worried now that the shoes aren't good. You're excited that you're buying the shoes for half off. Same thing goes in the mining sector. So I'm looking for assets that I want to continue to finance.
So Jeff, say everything turns around dramatically this next year and we have a raging bull market. What resources in particular, what commodities would be most exciting to you? Some people say we're going to have a lithium bull run, uranium is finally going to rebound. Is there anything that in particular that stands out to you, or just the entire resource sector?
I like uranium at this point. Uranium's been in a long bear market. You've had the Fukushima accidents and unfortunately the things that went on over there. You've had a number of things that have run against the uranium price after a bull market. We've seen what I think is a bottom. It's up. I don't think it's going straight up, but again, I think uranium looks pretty strong. A number of the commodities, again, it comes down to the asset. Gold could drop $100 an ounce, but if someone has an asset that makes money at $600 gold, that's a very interesting asset. So again, my main focus is the assets. Whether it's a copper asset, a lithium asset, a heavy rare earth asset, a graphite asset. It's really about the assets. But again, I feel that we should again, if you're buying the right assets, the commodities prices are less critical unless you're again, if you, like you said, if we're having a raging bull market next year in the resource sector, well, all the boats float. So again, there's a lot of, pardon my French, crappy companies and crappy management teams that, again, will have very nice stock charts. And if you exit at the proper time before the next bear market starts, you can do very well. I'm not interested in that, because again, if you're wrong about the great bull market starting next year and it starts the year after that, a lot of those companies with crappy management teams and crappy assets will have restructured again for the fourth time in the last 3 years, and I'll be wiped out. So in this market, I want to be buying the best assets that are beaten down. Just because something is cheap and it's down 90% doesn't make it a good buy. If it's a great asset and it's down 80%, I'd rather buy that in case the bull market starts in 2016. I want to make sure I'm still in the bull market and my company exists and the number of shares I own are the same number of shares and they haven't been consolidated, because, again, it wasn't a well thought out plan. It was how we raise money for 3 months, not how we execute for the next 3 years.
Well, I'd like to thank you again, Jeff, for joining us. I really appreciate your feedback.
Thank you very much for having me, Tracy.